I want to introduce you to something we call treasury operating system. Yeah? Just the same way, if you have an iPhone, you have an iOS. If you have an iPhone, you have an Android operating system, isn't it? Eh? The reason why the CFO role has been captured and now is only doing bookkeeping roles, crisis management, reporting what has happened, yeah, is because our operating system has failed us. We don't have a treasury operating system. It's an afterthought. Yeah? We are hitting the numbers, the revenues are coming in, but we're not hitting the cash flows. Our investment income line is thin. Think about Safaricom, by the way. Safaricom, when you pay for your airtime, it's instant, isn't it? Eh? So they have 0 collection period, isn't it? Eh? And then they pay their suppliers after 30 days if they are good citizens. Those guys are as good as a bank. Yeah? How much is their revenue? No, that's profit. The revenue, I know it was projected to be around 206 billion. 206 billion. Yes. Yeah? Yes. 206 billion. Not in receivable. Mostly in cash. So I want you to imagine the role of a CFO in Safaricom. You are in command of 200 billion just in 6 months. If you sleep on daily cash flow, one day, if you don't use those, if you don't have a treasury operating software or system, one day can cost you how much another company makes for a whole year. So you need what? A treasury operating system. Has anybody seen how much money banks are making? Yeah? I think, so. Is it Equity Bank? What was their half-year result? Not half-year. That is three quarters of the year. Was it 40-something billion? I think 42 billion. They made 42 billion shillings in 9 months. Equity Bank. Guess whose money they are using? Our money. And then we go and borrow from, and they charge us more money and they make more. But we've given our money for free. We've given our money for free. If it means 20 out of 26 of us, we are earning less than inflation rate. Okay? And the idea of a treasury operating system is to move you on the yield curve from where you are earning nothing to where you're earning above inflation. There's somebody who said that they work in a circle. That was Anne. It was you, eh? He said you work in a circle and the regulations require you to hold some cash, isn't it? Eh? But does the regulation say that that the money has to be idle? So we can do something about it. We all need treasury operating system. If you don't have a strategy, everybody else will have you for lunch, and banks are having us for lunch. And supper, eh? And dessert. So let's do one more before I go into this. Then I want us to answer the question, why is our cash sitting where it is? Ronald, let me throw you a question, as people are doing this. when you're employing a CFO or you're helping a customer to get a CFO, what do you usually have in mind?
Mostly it's financial strategy. How can the CFO contribute to the overall strategy of the organization? Not from necessarily an operational perspective, but from a strategic positioning in terms of optimization of their assets, in terms of liquidity, at the same time try to unlock more opportunities and increase profitability. See, I suppose it's not easy to get a CFO in this market.
A good one.
We will have so many CFOs. Most CFOs are trapped up in bank reconciliations, isn't it? Bookkeeping. And also, so it's not easy. So if you capture what we have said here, you will be a very competitive CFO. You will be the most wanted. Most wanted CFO.
Yeah.
But also, I can just comment on some of the things you say.
Yes.
And one of the things I liked about you to say is that you hold cash, but ethically. You know, when I was a CFO, I was told, by the way, pay your suppliers only when they are threatening to murder you. Yeah, so ethically. But anyway, that means that you have to hold cash as long as possible. But then I also want to say that most organizations don't have idle cash and they don't have investment. So they're just in a roller coaster, isn't it? Of
Cash
making
crunch.
money and paying operations.
Yeah.
So, you know, they have no deliberate strategy, especially most of the Kenyan enterprise, especially from my audit experience. And they think they are okay, isn't it? So as CFOs, how do you lead an organization to have available cash for investment? See, that's why you find that CFOs think their role is to collect and pay suppliers and pay employees. But there is nothing left for
the organization, the shareholder.
Yeah, that is why you see, when companies are on sale, they are mostly bought by foreign private equity firms. There are no local private equity, or even private. Only KCPA so now is buying some companies. But locally, most companies have no capacity to even buy another company because they are even in trouble just paying their own bills. So I believe this topic is very important. First is not how do you invest your idle cash. How do you create fast idle cash? The biggest problem is not having idle cash, but investing the idle. First, availing idle cash, and now divesting. And some organizations are just trapped in paying loans. Interest. If you pay interest on the banks, and you pay salaries and your suppliers, that is a ceremony. Actually, I was reading the story of Walmart. They came up with a strategic objective to build buffer cash and gain competitive edge. I was seeing the two companies boasting, Coke and this other competitor is called Pepsi. Coke is boasting that it's making profit and huge revenue. Pepsi is boasting it is very liquid. You know, which one will you buy in? Is it high revenue and high profitability without liquidity, or high liquidity in terms of which has been divested now into investment? That will what give you. So idle cash is a strategy. Then now you divest it into this particular investment. That will really put you on. So as a CFO, as you retreat back, is build a strategy for your organizations to have money. Because I've seen organizations that are doing very well, huge turnover, profitability, but no cash flow, no money in the bank. Of course, with the huge ODs, and then the money is trapped in receivables. And I like what my colleague, my neighbor here was saying. We were arguing, and she says that, you know, for them, they have very huge receivables, and yet the shareholders are pushing for what? For them to invest. So I was telling her, why don't you just charge your customers interest on outstanding receivable, and then you say you are also invested in the receivables because you will have interest income on receivables. Yeah, and you need to negotiate and push back for the insurance company.
Yeah.
Because they can be they are actually using your money.
Yeah.
So the issue of them bringing contracts and signing means you are vulnerable. How do you create capacity as a hospital? You are able to sit with the insurance company and say, you know, it's not just what you say. If you don't pay me within these days, the money comes with an interest. Because I see the insurance companies take a lot of hospitals and clinics and pharmaceuticals for a ride. Because they will not pay, they want to act as the big brother, isn't it? And bully you because they're giving you business, but you're financing them. Yeah, but again, you can also be smart. If you're not willing to pay me within 30 days, we have to increase the rates higher so that you can pay your bank interest. And don't go. You see now they have to push you on the rates, and also they don't want to pay. Yeah. Anyway, thanks.
Let's give him a clap.